Welcome everybody, my name is Mike Hamilton from Trade the Easy Way, and I've delayed doing this weekly review of the markets because there's so much going on in the second half of the week. So we've got UK spring government statement in half an hour, so I'm doing this just after midday on Wednesday the 26th, 8:05 in New York and 12:05 in the UK. So tomorrow we've got final GDP, quarter on quarter in the US, an hour before the markets open, and Friday morning, an hour before London opens, we've got UK retail sales. So we've had triple witching last Friday, all the contracts got switched over. So I just wanted to sort of stand back for a bit and just get a view on where the global markets are not just the US. This is China. So we bust up here. This is a weekly chart, by the way. We had two huge weeks here in September, and ever since we have stabilised in a sort of fairly neutral ground. So were this to break this 14,000, we should get back to those highs, and you can see the averages, 50 and 200 day average, potentially crossing. So this could be it's at the moment looking very bullish. If we can at least hold this 13 and a half, might see another test of 12,900, and if we can then dip and then pick up, then this has got real potential to go. Normally, if you get a consolidation like this, you're chopping around, the consolidation is normally over once you dip, shake out some weak hands, and then pick up and potentially go. And we'll look at that pattern on a couple of stocks today. So I wouldn't be at all surprised to see this maybe one or two rough weeks, and then if it holds and these averages hold, then we can push back up to 16k and maybe beyond. So let's now look at the weekly Nasdaq. So we can see we've had a huge run into 22k, about 4 weeks pulling right back into support, and here we are just about to go into the middle of the week in the US, and we are picking right up. So contracts have all switched over, volumes come back in the market, support's held. So if we can get back above this 21,000, obviously then we can pick up and potentially get back to the highs. If we struggle just at that resistance that we're very close to, which is, let me just find out what that is, around about, the 21,000 mark. If we struggle there and sell, and that becomes resistance, then we are potentially going to come all the way down to 17,000, 18,000 and maybe more. So we've had an incredible run here from 22. There's the trend line at the moment, which has held, it's been intact, and here is the, whoops, let's get rid of that, and here is the top of that channel. So we could go all the way up to 24,000 if this low of the channel holds and go and find the top of the channel. But we've now got a very, very sticky area around that 21 and a half. Okay, and for a quick look at the FTSE, then we move quickly on. So FTSE has gone right into that extension, pulled back to support, and now we're just waiting 20 minutes off for the spring statement, and we're neutral. So like I said, I wouldn't be at all surprised to see a dip back into 85k. We're currently 86.80, and if that holds, then I can see it's getting back to 88 and getting off to 9,000 plus. 9,003 is the other extension. Okay, so this move back here on the 10th of middle of March was very bullish. The fact we pulled right back and held, we're going sideways since for a couple of weeks, but another further dip holds something like 85, 86, and then we could potentially push up and resume. Otherwise, see, that's not a sell signal to me. It certainly shows the end of this little phase, but it's had it have closed under 86.5 on the week beginning the 3rd of March, I would say that was a sell signal, but all we've done so far is completed a wave pattern. So we've got, let's get the pen, that's easier. We've had a huge move up and a 3-wave correction pattern, another 3-wave correction pattern, very tight, nice bull flag, and then we went on another run. So we effectively got 1, 2, 3, 4, 5, and then another 1, 2, 3 correction. So this has been the start of a new wave, wave 1, wave 2. Wave 2 could be complete. As long as wave 2 doesn't close underneath the main breakout area of wave 1, then that's respected it, so that's fine. So wave 3 could take us into I'm talking about another potential wave pattern up here, but the long term could be into 9,300. And as you'd expect, that's the bull scenario. The bear scenario is we close under 85k and then we start to retrace all the way back down to these 22 levels, and maybe, who knows, maybe even beyond. Alright, so we're neutral going into this period. Cyclically, and this is really important, cyclically we would continue to push right into April and May. So the April-May push could see us up there, and then we wriggle around into the summer and potentially pick up into the autumn for the bullish move. Right, let's go back to the daily, and let's look at this FTSE on daily. So you can see this 50-day average is holding, so the market is bullish all the time above the 50. We've got the crossover. In fact, the actual official crossover was right back there in February last year. So you can see how important 8700 is here. Close above that, and then we can resume that push higher. Right. If ever I get out of the stock, don't necessarily follow me, because I got out of this Pro at this resistance level and it's still been motoring ahead. I think it's almost, we're not far off £1 higher than when I got out. Well, that's fine, that happens. I'm swing trading it, not long-term investment. We just hit that May 24 high. Yeah, this is affirms the sort of cycle you get. So we did a 3-wave move into May, sell in May and go away, and then we just wriggled around, and then finally broke out here in January, February, and we're still, so we get a 1, 2, 3 wave correction, and then the breakout. Okay, so next stage is £8.83, 883, assuming we can keep going on Pro. If you want to get in on Pro, look for 775 pullback in the coming days and weeks. My newest stock is this SPG group. If you're interested, there's still time. You might see 150, 152 again. Who knows? You might even see a full 148. Look at the weekly on this. You can see it's never recovered post-COVID. So just as COVID broke out in Feb 20, we plummeted from 670 roughly down to 137, and we've been dancing around in this range ever since. We push up, we pull back, we push up, and so on. We wriggle around, do a deeper pullback, deeper 3-wave 1, 2, 3 wave correction back into close to the 137 low, and then here we go 1, 2, 3, 1, 2, 3 wave, and we're pulling back into this 150, holding 150. If at any stage we can break out of this 170, 180, and of course the big £2 mark, this could go and find, potentially go right up to £3 and maybe more. Alright, so my target on this is to see if I can get at least £2. There's the 200-day average up there, around about 250. So that £253 will be a very nice target. If we can, to do that, we need a good close this week. We need to stay above really 160 end of the week. Where are we? Yeah, we need to be 160 plus end of the week. That's going to survive. If we just could move sideways for another week, but then subsequently close 160, that's fine. But you can see this channel I've drawn here as well. So I've got this channel coming down. Didn't touch it at the most recent high, and we've got this channel coming down from these points here. So we breached that. That's fine. But every time we breached it, we go back up, breached it, go back up, breached it, go back up. So, you know, these are all, if you're in a stock and you're taking some heat, as long as it gets back pretty quick, obviously don't take too much heat, don't risk your capital, don't risk more than 3%, then, you know, these are good points to pick up dips. Of course you could put another lower channel on there. There's a lower channel here. That's not really working as a channel because you only got 2 touches. Anyway, so I like this stock. The moment the volume's picking up, I'm in SPG group with still time, plenty of time to get in. So there's the nice daily. That's the 160's up there, so I'll draw a line on it. Let's put a nice red one around the 160 mark. I need that to get above that zone this week. Alright, you can see what happened last time we did that. December, we shot up from 160 and went and found the high 195. That's SP, right. They've got 25% of a multi-billion-dollar global airport and railway catering network. And AMS, Advanced Medical Solutions, dipped here on Friday. Could have got a better. I topped up this on Friday. Added to it, I should say. Could have got a better price. Got in, took a little bit of heat straight after I got into this one. If I'd waited another 90 minutes, I'd have got a much better price. Anyway, we have closed nicely yesterday. Obviously, need to make sure we stay above £2. And if we stay above £2, we've got the potential to ultimately go back to 240 and maybe more. If I pinch back, you can see Advanced Medical Solutions, obviously in the medical sector, and if we can get going, then that's a good stock. If we break under 190 and stand on 90, I'm out. EasyJet, so I'm flicking around the sectors at the moment. EasyJet, if you look at the weekly again, we have got, tell you what, let me just get rid of all this noise a second. What I'm seeing here at the weekly is a series of higher lows and higher highs. Okay, so this is winding up. We need, obviously, as you probably know what I'm going to say, we need to stay above £5. If we can get above £5, then I think this £6 or £7 is the target. The January 21 is right up there at 705. So if we can hold this pattern and close above the £5, then longer term, I don't know if it's going to take weeks and months, we could be up there at £7 and maybe more. Okay, so EasyJet is not above the 50-day average on a weekly chart, so that is a downer. We've just got to get above and stay above that £5. And what else? Let me look at Tullow. Tullow had earnings yesterday. I got stopped out of this, so this is really perked up. We started to look good on the Monday. The earnings went down well, closed at 15 and now we're at 17. What a shame. And we look good over here in December. We had a buy signal there on 4th of Feb. New low, close above next day. But the volumes weren't great. The volumes didn't support it and we just eked lower until earnings. So if that's the earnings bar and you want in on this, I would recommend try and look for a bad hair day and see if that gets to 14.5, or certainly wait for at least 15 if you want in on that. I'm not touching at this stage. Right, let me go to my list. This is orange juice. The reason why I'm talking about orange juice is because I really like it. So we were on this huge run. So last January 24, we were down there at just under 29,000 and we ultimately went to nearly 55,000. Now, we've done this huge correction. Obviously overshot the January support, but the volumes are coming back in this. See, notice how the volumes really picked up here. Every time this dipped and got to a critical pivot, so we're up, the pull back, volumes come in, pull back, volumes come in, pull back, volume is coming in, or has come in. So that's the reason why I like orange juice. You can trade this on a non-leveraged ETF. I am going to stay out of this and just see if we can go and find 25,000 again, the big 25. Alright, so if this is the big, this is a daily chart by the way, 1, 2, pull back to 20, if we dip to 25 and hold, then I would look to see if we can wing our way back to some of these higher numbers. Alright, so I like you can take a nice easy trade on an ETF without using leverage, without worrying about any your major shifts, major alarming drops in it, not trips. It's a good way to trade. Watch Glencore. You can see the channel. This is a daily chart. If we start to close above £3, sorry, if we hold, we're above £3, we're 307. If we dip to 307 and hold, this could be a breakout candidate. Volumes are picking up. Bottom of the channel, just waiting to get more confirmation on that one on Glencore. Another watch, CBG, Close Brothers. I want to see, they got tangled up in the car loan claim, so they've been giving back huge volumes of money in the car claim issue. So the question is that all over and priced in, or is this one still potentially about to top over? So shoulder, head, shoulder. So we've already broken a neckline, already broken a key level of support there. So what I don't want to do, if we are still correcting lower here, what I don't want to do is come in here and then get stopped out as this winds back to support. So I'm looking for, I would buy at 250. I would like to see 245, 250 on this one. So the low of this breakup area here. If it dips further, then obviously I'm going to sit and then wait for the £2 mark. But I want in on this, but I'm just going to be very patient on that. That's Close Brothers. And quick look around, talked about AJ Bell. I think AJ Bell is potentially looking at a nice base. £4, 4.15 is a good place to get in on that one. Staying in that same sector. Pension B, no, it's not doing it. Lousy volumes, lousy chart performance. Let's go back to some commodity related. Rio, yeah, I think this 46, 47 has held. What's wrong with me today? Any pullback to 47 I think is a buy on Rio. General, I would leave that. Talked about FCX, the American copper. There we are. Let's look at this pattern I drew down here in March. We've really gapped up there. So if you see 40 again, I would buy 40. We've gapped up. So any push, any time we get a bad day and dip into 40, I think that is FCX is buyable. Keep a close eye on this one. I don't like this yet. There's a huge drop here on the 24th, and we're still, if I put a rule on the bottom of that, we can't even close above the 705. However, if we do sometime soon, I would be a buyer of that one. If the volume picks up down here and we close above this trend line, I would start to buy into RNWH. Is it Renew Holdings? I think it's called. Foresight Group. Yeah, so we had a buy signal down here on the 14th of March, and that 360 is holding. Volumes are picking up. We're under the averages, so this is a reversal trade, not a trend trade, which is why if you are going to engage these markets, you need to buy on a dip and prepare to get out if they don't hold, as opposed to a trend trade, which would be above. On this one, a trend trade will be above 380, 390, and then you buy a pullback and then see if you can get to 413, etc. What are the others I'm watching? Aviva. Wow, that's off. So a quick look at the banks, which for some reason I've not got on this. So interest rates have been kept high, so the banks are doing really well. Look at this down here. August 24, November, and then January, we had a huge breakup on the 15th of Jan, and all dips so far have held. So 50, 52, and we're currently nearly 70, well, just above 73, 74, looking higher. So watch out for these patterns. All those touches and the pushes, subsequent pushes, if you see them. Barclays, that's now a buy at 295, but you're going to be buying very high on that one. That's had a huge run from 121 in November 23, not that long ago. Direct Line is shooting up. Legal and General. Legal and General looks like a buy. We're above this trend line. Volume's a little weak, but we look at if we could go and find that 260. Saga. That's picking up. Not a stock I would like. Sabre Insurance. Anyway, I'm going to leave it there. Hope that helps. By all means, drop me a line on what you're looking at, and I can pick that up and take a look. Well, final one for you, AstraZeneca. Lovely little move. We're getting a series of lower highs and lower lows, but we had a huge move off from 95. We've just seen 120. I've just seen 12, and we're just sitting there on this 11 mark. If that pulls up there, I think AstraZeneca is a good move. Alright, hope that helps. Bye.